Well, Francisco Ruvalcaba Jr., thanks for coming to the studio, man.
Yeah, thank you for having me.
My pleasure. All right, so let's get right to it. No sugar to coating anything. What's going on? He wanted to kind of talk about people getting beat out over asking.
Yeah, that's one of the biggest things. I mean, obviously, we've been saying is just how we don't really see the market letting off too much.
Right.
And just kind of vouch for that. Even this past weekend, I was helping a client out, and we go out. We saw this house. It needs work. Like, it needs probably anywhere from like $60,000 to $80,000 in work, I would say, to get it like up to par where nowadays what people's expectations are. And nonetheless, I mean, we went in there.
What's the price point?
So this price point, it's in Modesto, and it was listed at $480,000. So pretty nice price, nice big lot, great area.
Is this the one that was like a rental at one time and needs work?
No.
Okay.
No, it was within the family.
Okay.
And we
were
probate
actually sale?
No,
Okay.
It was not a probate. So that was another thing too, is like, I mean, it seems like it is like a sale that's taking place like with the family.
Right.
But it's not within a probate. It's just, there's a lot of heads obviously that need to make a decision.
Right.
Nonetheless though, obviously there was a lot of people that expressed some interest. They ended up getting multiple offers, and they actually ended up even getting an offer that went well over what they were asking, and was even willing to offer some appraisal difference, which we've talked about that we were maybe seeing go towards that. And what paying for an appraisal difference is, for example, I mean, you offer on a house, let's say, for example, offer $500,000, is a $480,000 house, offer $500,000. If the house does not appraise for $500,000, let's say for whatever reason it were to only appraise for $490,000,
right? That
$10,000 difference, now that buyer is having to come out of pocket that difference, for that entirety, because the bank is only going to finance up to the $490,000.
Whatever the appraisal came in at. Yeah.
Right. So we're back to seeing that. We're back to seeing a lot of people getting comfortable enough to do that again. And what I was telling Ed too is that the craziness of it is that it was during a week where our rates were above 7%.
Right. But I mean, rates are relative. You got investors still coming in paying cash for properties, buying stuff, and they're paying full price. They're not getting a discount on it. It's just that we're I don't think people realize, just in California, I found this number a couple of weeks ago. We're 2.5 million homes short just in California. But that's huge.
Right.
We're not 100,000 short, 2.5 million. So that means they have to create an extra 500,000 on top of the normal homes they were building, right, for the population growth for what's that, 5 years, 5 times 5, yeah, for 5 years. Well, that's not going to happen. So they got to do 250,000 for 10 years. Well, that's not going to happen.
Yeah.
So it's a problem we're going to have for a while. People need to stop thinking that this house thing's going to change and drop and go, and values are going to go down. It's shocking. It's because we don't have inventory. We don't have properties on the market, because people have really low interest rates. They don't want to lose those, so they're not coming on the market. It's the shortage of inventory that's doing this.
Right. I even was like seeing this, it was like an article of people talking about like they were starting to pin the equity as like artificial equity or something, right? Which, like, I mean,
you mean but everybody makes shit up.
Right. I mean, and that's the thing too, is,
you're trying to be taller than me?
No, sorry. No, it's like, what I noticed though is that there's always that kind of the fear mongering, right? Which people like to say, oh, this is what was going to happen, or yada yada yada. But our values are kind of like, I feel our values are accurate.
Okay, a value is what a buyer and a seller are willing to come to terms on. That's the value. That's what it's worth. The issue is people are listening to their grandpa, their dad, the other people who've owned a home forever and hasn't ever been in this market. And we talked about this before on another show because someone commented saying there's a lot of people looking but kicking tires, but not actually, trying buying and pulling the trigger and moving forward because they're listening to their family who's saying, "Oh, it's crazy out there," blah blah blah. And I said, so basically, if you go to the doctor and they say you have this tumor and you have to have it removed, do you go home and say to your mom and dad and everybody else, "I have this tumor. Should I keep it?" "Oh yeah, just keep it. Don't worry about it." Well, listen to the professionals. I know people don't think, and that's the problem. We've had some bad people in our industry in the past, but real estate agents, right? Realtors and loan officers, good ones like myself and you, are huge. We know what we're talking about. We research stuff. We know what we're talking about. Yes, there might be that old sales guy that used to sell cars or whatever. And that's not who you listen to. You listen to the people who know what we're talking about.
Right. And it's what, especially when we get on here. I mean, I'm trying to provide you with like a lens of what I see and when I'm out there. And that's
on the front, you're on the front lines.
Yeah, like I always tell everybody, that's when I come on here. I mean, I'm always giving my personal take of like my weekly life, right?
Mm-hmm.
The way that everything is really happening and how I'm seeing it unfold. And it's crazy because I mean, if you were to jump back, I feel like not even more excitement, but it was kind of more like, hey, like everybody, we can get out there and we can get this and we can get that. And a lot of that has been diminishing. It's like I've gone to the point, like, for example, my client that missed out on that house actually ended up going back on market. And then obviously the questions start coming up like, okay, what happened?
Why?
Why?
Because if you pay cash for I don't know, they did appraisal over, right?
Well, yeah, they did appraisal over. So it's like I told him, I said, well, maybe what they could have done is they were going so aggressive, they forgot that the rates were 7% and then they're backing out,
Right. Or they didn't keep with their loan officer to say, hey, what's my payment? And they had a payment on 6.5 and now it's 7.25. Because in the last few weeks, we went that high. I just quoted somebody yesterday or whatever, and it was in the sixes again. I was like, oh, thank God we're in the sixes again.
Right.
And that's because 7.5. I was quoting somebody a refinance, cash out refinance, and it was 8.25. I'm like, they're not going to do this.
Well,
and he had to. So
that's the part too that, obviously I feel gets a lot of people is that they're not, or maybe who knows, depending on how they were qualified again, like you said, right?
Right. Because we had a couple that in a 3-week period, rates went up so much in that 3-week period. People were like, what?
It just throws a wrench into it. But the crazy thing that I was telling my client, I was like, look, they had multiple offers and they had people offering appraisal difference while the rates were at 7. I was like, we could wait, we by all means we can wait. But what do you think's going to happen in this same exact situation, but the rate's 2% less?
Crazy. It's going to go through the roof.
Yeah. And that's the part that I've been trying to warn people about. I told him too. I said, look, like this is what I've been warning my clients about. He's actually a family friend and everything too. And it's like I told him, I said, it's not even me trying to scare people. I hate that it's getting to this point. I hate that we're back at having to offer that difference because it's like I told him, your average person can't do that. It's probably someone who's selling their house, someone who's been saving quite a bit of money and is able to. But the average Joe can't just fork out, hey, here's an extra 5 or 10 grand if the value doesn't come in at what we're offering.
And it depends on if they're putting down 20% or if they're putting down the minimum. If they're putting the minimum down, they're not going to be able to. But if they're putting 20% down, then they can say, okay, I'm only going to put 15% down or 10% down to do it. You follow me?
Yeah.
That's how a lot of people, and that we're back to where we were a year ago doing that. The difference is rates are just so much higher.
Right.
And I saw a thing where it said people are used to a $7,000 a month payment now,
which is
that
crazy.
would be that. Yeah, but that's so 4,000 is 3,200 is so that's a $800,000 loan. So that's Bay Area and San Diego and minimum to first get in, and that those numbers seem ridiculous for us, but that's really where they're at. They used to be. So
yeah. No, it's a crazy time, but get out there. I mean, get in while you can. You know, they've been running out.
Yeah, and you're going to be able to refinance down the road and get a lower payment, lower this over time in the next couple of years. I think 2025 is going to be more affordable for people. Well, that just means house values are going to be through the roof. So, and what we're seeing right now is we're going to see appreciation 10% minimum this year.
Yeah.
So don't wait for that shared appreciation program either, because you'll be wishing you would have got the house beforehand, because that's going to bring out even more people.
Yeah.
Right? And doing just what happened right now.
No, and we'll keep seeing it. So prepare yourselves. At least be approved to where if you see something, you can get it.
Yeah, stop waiting. You need to get with somebody like myself and be fully pre-approved, fully underwritten, so we know exactly what you can and can't do.
Right.
All right, Francisco, thanks for being here today. Thank you for watching. We really appreciate it. If you like what we do here, subscribe to our channels. That's a Real Estate Jerky, Ed Parcaut, and Francisco Ruvalcaba Jr. on YouTube. Thank you so much for being here. And leave a comment. Tell us what you want